So things have gotten crazy again. Now, as we mentioned before, it's all about oil. Now I remember those skits and jokes about oil and the US military, how they would suddenly show up at a mention of oil with all the Black Hawk helicopters coming in. Well, Trump is beginning to prove that stereotype once again. And what just happened is unbelievable. And it proves the ramp up of pain on Maduro. The global oil market is now collateral damage. Now, Trump has ordered a complete blockade of all sanctioned oil tankers. So these ships can't go into and out of Venezuela. The U.S. Navy Armada has surrounded the country, and it will only get bigger. Now, in a post, Trump really went pedal to the metal here. He wants all the oil, land, and assets that they stole from the United States. I have no idea what he means. Until that happens, Maduro's oil trade is going to get throttled to a major degree. Now, just a week ago, Trump approved the seizure of an oil tanker. They did a Rainbow Six commander drop and took away 1 million barrels of oil. That was bad enough. But this blockade has big material effects and is a big geopolitical warning. It's a warning shot to Iran and Russia producers that use shadow vessels, some of which are sanctioned. Now, right now, only 10 to 20% of this fleet are sanctioned, but the U.S. can always expand the list. And once the list is expanded now, you can go around and seize them using the military. Worst of all, a blockade shows that the very supply chain across the oceans could be compromised. The U.S. Navy now has an excuse to sail the high seas or establish choke points or blockades wherever they want. Now, as a result of this, the price of oil has jumped higher by over 1%. Now, the timing is really suspicious. Oil prices were sliding down below $55. Crude was suffering a loss of more than 6% over the last few days. Not very good for the U.S. oil industrial complex. And now that Trump has ordered the blockade, everyone is freaking out, not because Venezuela ships a ton of oil, but because of how far Trump can go. Now, Maduro exports less than 1 million barrels per day of oil. That's not a lot. The global oil market is more than 100 million barrels a day. So this shouldn't move the needle. But yet, crude oil is rising. It's because Trump could expand this to other countries and regimes should this experiment work. And it's all about cornering Maduro's economy and putting extreme pressure to encourage regime change. Now, because this is the U.S. military taking action, that alone is starting to scare global oil traders. This next part is key. Just from the tanker seizure last week, buyers of crude from Caracas are demanding big discounts. They want changes to spot contracts because the risks have just escalated higher. You have no idea if your shipment will end up in a final destination or get seized halfway through the voyage. You just don't know. The higher the discount, the worse it gets for Maduro's economy as well. So there is a method to the madness. Trump's blockade is choking off revenue to the country, of which over 20% of GDP comes from the oil trade. So the blockade is indeed a very big deal. It can and probably will destabilize the economy to a degree. Now, we are not joking about the discounts. Just from the seizure alone, discounts went from $14 a barrel to $21 a barrel. That's like a 30% discount of crude. Why? Because the risk is just too high. Now that you have the U.S. military blockading the seas and coast unit balls of steel to ship Venezuelan oil, there could be interceptions, delays, diverted flows, or vessel boardings that you now have to factor in. You have to put that into your calculations. And what if the ship gets delayed for a day? Now you incur what's called a demurrage penalty fee. Oil buyers don't want to be liable for those. So the pain will be pushed to the seller. In this case, Venezuelan oil producers. This is where China comes into the mix. Now, they buy up to 90% of Maduro's exports, and a blockade definitely impacts Chinese supply chains. It's all about the big discounts and the U.S. threatening to cut those off. Now, China won't be happy about it. They rely on cheap crude to ride out the Trump tariffs. Export margins are quite thin, so any supply disruptions can affect Chinese manufacturing in certain sectors. But the global oil trade is not so easily taken down just yet. There are a ton of Venezuelan oil around at sea inside floating storages, around 20 million barrels worth. Now, China buys around 500 to 600,000 barrels a day. So supplies there should last until late January or February before there's a crunch. But if Trump continues the blockade indefinitely, then China will feel the squeeze. So this move by Trump is dangerous. It's a warning shot, not just to Venezuela, Iran, or Russia. It's a subtle flex to China that we can't control the global flow of crude oil. It's not just because the US is a big producer themselves, though they are, but because they are willing and they are using the military and navy to force geopolitical outcomes, otherwise known as gunboat diplomacy. Now, while this mess is happening, China is also making moves to corner the US, and this revolves around using the Chinese currency, which is very, very undervalued. According to G-Man, the Chinese RMB is undervalued on a trade basis by 25%. Now, this is nothing new. China has been suppressing the RMB for a long time to boost exports. And it makes sense. By devaluing your currency or keeping it cheap, exports are more affordable. Now, back in 2022 to 2024, that was important when Biden imposed the EV and a solar tariffs on the Chinese. And when Trump started his trade war, China also kept their currency cheap enough to weather the storm. But because Trump punished the world with a 10 to 20% tariff at a minimum, so importers now have no choice but to buy more from China, is a big reason why the trade surplus is about to hit 1.2 trillion this year. And China could be planning to appreciate their currency in a big way. Now, some are calling for 50% appreciation in the RMB over the next 5 years. Now, that sounds unthinkable, but the export challenge have been solved. There's also room for this to happen. Now, in real terms, versus the dollar or the euro, the Chinese currency is massively undervalued, which means the upside move could happen and last for quite a while. And if China does do this, we could see two big effects happening now. The first is helping to lure in more foreign investments. If the currency appreciates, it helps to boost domestic consumption. Suddenly, Chinese consumers will feel richer. Imports become cheaper. So now they spend more, and the domestic economy also benefits. Now this, of course, isn't good news for the US. If the Chinese RMB appreciates, we could see a capital flow away from the American economy. Suddenly, Chinese stocks and Chinese bonds will become more attractive. Now, yes, I know Trump believes the US economy is awesome, but this level of delusion is hiding the truth. Just listen to this. President Trump last week gave his economy a grade of A++. What grade would you give the economy today? A+++. Now, let's look at the numbers again. Remember the shutdown that gave us a blackout on US data? Well, the new payrolls are out and is definitely not looking good today. October recorded the biggest drop since 2020. This is the single largest drop since the pandemic. Unemployment is also a disaster. We just hit 4.6%, is the biggest on record since 2020. This alone is making investors skittish about the US economy. This data also confirms that in 2026, there will be more rate cuts on the table, which means more dollar debasement and less incentive to hold treasury bonds. If China decides to appreciate their currency, it could just compound the problem for Trump. The US economy is so hyper-financialized, and the AI bubble is so big that money must not leave the US. While the US is on the brink, one country is already experiencing collapse, and it's Germany. When you don't have cheap inputs, when you are cut off from cheap Russian commodities, German industries, they're going to fall apart, and they are falling apart right now. Volkswagen is closing down production on German soil itself. They are shutting down manufacturing in Dresden. This is tragic, and it ends an 88-year history of constant production no matter what. The company is essentially in limbo. They are facing an epic squeeze like no other, and unfortunately, this is going to lead to massive job cuts by 2030. The entire company will shed over 30,000 jobs in Germany alone, 30K. Now, as we said before, is there a way out for German industries? Most definitely, there is. But it would mean an arrangement with Russia to resume trade. Europe needs cheap metals, and they need cheap energy from Putin's economy. There's no two ways about it. You cannot manufacture anything competitively with expensive US LNG. Even getting shipments from Qatar is a cheap not when they are still existing pipelines connected to Russia. Now, Volkswagen has an investment budget of 160 billion to allocate. That is a lot of money, but they have no idea what to do with the funds. Petrol engine cars are still rolling around, but EVs are definitely coming up. Meanwhile, the company has a cash flow crisis thanks to weak Chinese sales. Competition in the mainland is just too fierce. Demand in Europe is also extremely weak. Meanwhile, the 20% tariff to US markets is crushing sales as well, so trying to shift sales to America isn't going to work. This was highly predictable the moment Europe sanctioned away Russian energy and closed all those nuclear plants. Now that the Dresden site has been closed, the company's ID.3 electric vehicle will have less production. Fewer units will be rolling out, and that leaves the door open for even more Chinese vehicles. Guys, despite the tariffs, Chinese vehicles are just too affordable. You can still save tens of thousands of dollars. There's no way for Volkswagen or any other company to close the price gap long term. Now, a Chinese EV cost around $26,000. Compare that to a German-made EV that cost around $64,000. It's more than double the price. Even with a 50% or 60% tariff, Chinese cars are cheaper. For combustion cars, the same thing plays out as well. A Chinese gas car costs $26,000. For a German-made one, it's around 47 grand. That's like 90% more expensive. Unless Europe clamps down on all Chinese auto imports, which is another problem, is going to be a very big diplomatic firestorm. Chinese cars will continue flooding the markets. Not only are global markets closed off, now the EU markets itself is losing a ton of customers. Since 2025, especially after Trump's terrorists, EU demand for Chinese vehicles just flew up. Across the board, whether it's ICE vehicles or electric cars, volumes are surging higher and higher, and the numbers say it all. EU consumers just don't have enough money to spend today. They're getting pulled in all directions. Groceries are more expensive, and energy prices are definitely much higher. So when they have to choose between a German-made car for 60 grand versus a Chinese car for 40 grand, the choice is mighty obvious. Right now, Volkswagen is still in a top spot for now. But as time goes on, Chinese brands are going to catch up. Europe has a few tough choices. Both will be painful, and they will require abandoning their pride. Now, the first is to refire up all the nuclear plants. Maybe you have to build more, especially for Germany. You need cheap energy at all cost, or you make peace with Russia and get back the supply of cheap gas. But until that happens, Germany and the EU in general, they will deindustrialize is a doom loop spiral that won't get any better. But let me know what you think. Did Trump make a mistake with the oil blockade? Can Germany revive their auto sector without Russia? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this crazy times.